I want to start with, obviously in the middle of that so-called mess, a lot of uncertainty. What's showing up in your business, just in terms of how you're coping with the toing and froing on Brexit?
It's largely business as usual on the ground, because we have quite a devolved system now in the UK, and so the cities, a bit like America, have quite a lot of devolved power, and we're seeing good economic growth continuing in all of our major cities right now, and so the Brexit effect, economic effect, hasn't really happened so far. We've seen a decrease in investment, but a lot of that's just stalled investment, and it will pick up when the political uncertainty disappears.
Right, but consumers are going to continue to spend, right? Because A, they're a little bit depressed because, you know, there's so much uncertainty, and every day they turn on the television and nothing is getting decided. And B, they're afraid that if Brexit does happen, you know, maybe prices will go up, their money will be worth a little bit less, so why not just buy it now?
Well, I think we've got a tremendously strong job market, very much like the United States. We've got 32.6 million people in jobs. That's about 4 million more than we forecast about 15 years ago. So we've seen a massive increase in jobs, and consumption stayed high. Mortgage lending stayed strong. The property markets, with the exception of retail, which has nothing to do with Brexit, it's just to do with disruption. Everything else is in reasonably good shape. Politically, we have all this complexity, but actually on the ground, people are getting on running businesses. And most businesses are pretty well prepared for the Brexit scenario anyway. We've all had 3.5 years to prepare, particularly the financial services
But they
companies.
couldn't prepare because there are no deals that can be struck until after Brexit. How can they prepare?
They have prepared. I mean, the reality is for financial services, we're fully prepared we've basically lifted most of the European legislation straight into the British legislation. We've agreed all the deals with all the countries. Bizarrely, the 27 countries in Europe have all agreed to the Brexit deal. We've got one country which hasn't, which is our country, and they're not massive issues which need resolving.
One of the things I know that Legal & General is quite focused on is across the spectrum of ESG, but particularly inclusive capitalism. Amid all this uncertainty, including the threat of a recession, how do you maintain that commitment, and how does it actually look in real terms for you?
Yeah, I think it's a very valid question, because in the long term, technology and demographics are going to have a much bigger impact on our economy than Brexit. We've got huge infrastructure deficits. 20, 30, 40-year projects all queuing up, waiting to be done. And we've managed to do about $25 billion worth of those in the last few years, and invested that in the economy. That's not going to go away. And the message of inclusive capitalism resonates very well across the whole of the UK. That's what people want to hear, that actually businesses are getting on, doing the right things, delivering the right outcomes for the right reasons. And we're seeing that right across the UK right now. In and around the 2 or 3 miles around Westminster, there's a huge amount of uncertainty, but that's not translating itself into a lot of the towns and cities across the UK who have devolved power and are actually getting on with things. We have brilliant universities in the UK. There's only one country got better universities, or more better universities than the UK, and that's in fact the United States. And so we have this incredible grounding in science and technology. What we've done for the last 20 or 30 years is underinvest in the economy, and what Legal & General has been doing for the last few years is overinvesting in the British economy, in the sense that we're seeing all these opportunities, very willing partners. We've just signed a £4 billion deal with Oxford University. That's a 40 to 50-year deal. They're actually comfortable with doing a 100-year deal with us, because we've been around for 185 years. There's lots of people thinking long-term interest rates are incredibly low.
Yes. Well, it's nice that there's lots of positive messages to put out there, but what's your biggest fear as it relates to Brexit?
The biggest fear is it drags on and on and on, and I think we're at risk, as you rightly pointed out, of a self-induced recession, a SIR as we call it, or self-inflicted recession. We can't let that happen, because there's such a great investment environment and very low rates. We've got to step forward and do the right thing for the people of Britain.